It's Wednesday, November 11th, and the markets are once again mixed following a market rally on Monday. I'm Catherine Ross, and I'm joined live by Jim Cramer. Jim, let's start with the markets. What are you watching today?
Well, I think that we're trying to make a stand here on some of the what I would call the what many think is overly valued stocks or high valued stocks, as it exemplified by ServiceNow, which is the piece that I thought was the most important piece of research this morning, other than Costin's bigger piece from Goldman Sachs. And the reason I say this is because ServiceNow is a very expensive stock. We know the stock well. It's Bill McDermott runs it. And there's a piece saying, listen, it's time to buy the stock. And the stock's up 24 points. And that piece tells the tale of the tape. Because if that lead of 24 points, even though it's only on 500,000 share volume, holds, then what it's saying is, okay, we've overreacted and to the hate that we put on the high growth stocks, and it's time to rotate back in them. We're seeing it with Alphabet. We're also seeing it with Amazon. And that would be good news because we don't want to give up those stocks. What we want is a belief, and I'm going to talk about this, of course, on our conference call. What we want is a belief that you can have both. This is the so-called barbell, and we're not going to lose that necessarily. I mean, I see there's certain stocks that are just doing incredibly well, like a Pepsi that I feel terrible about to be sold. The reason I say that is because there's these 3% growers, 3% yielders that are doing so well. It is such a mixed bag today, Catherine, that it is very, very hard to read. The banks are coming down. Some of the industrials are coming down very badly. And in their place are coming the tech stocks that we regard as being COVID stocks. It's almost as if what we decided is, yes, the vaccine's coming, but not fast enough. And that is a real issue.
Well, and then we also have, with the vaccine coming, there comes this transition. But President Trump continues to tweet that he hasn't lost this election. And I'm wondering, from an investing standpoint, what kind of approach do you think that investors should be taking?
Well, I do think that what you have to do is worry that the president seems to be so adamant that he's not going to get kicked out. And what do you have? What leverage does he have? Well, he could mess with the electoral college. The attorney general could say, you know what, look, even though maybe it's a systemic issue in some of these states, and he's got to pound the votes. And then we delay the electoral college. And then at a certain point, the president says, all right, well, look, I'm willing to concede that Biden is going to take over, but I want it to be known forever that I actually won. Something like that. Could this happen? Yeah, I mean, it could happen because he's got Attorney General Barr totally on his side. He's got the Senate completely on his side. So it's not like you've got people who are saying, listen, you got to get out. So I think he's going to leverage it. The route to be able to defeat the will of the people is not easy. Could there be competing electoral college slates? Yes. The Constitution does allow that. Is it entirely possible that Barr forum shops a judge, finds a judge who's sympathetic ideologically to Trump and says, listen, that election is not valid in a given state? That is certainly possible. All these things have to be considered, and they will be considered buying opportunities because I do not think that we're in a so-called Pinochet situation like we had in Chile. But I do think that people better be aware that this could happen, and this, coupled with the fact that the virus is not under control, could lead to a negative scenario for more than just a few days.
Jim, today is Veterans Day, so I want to ask, is it important for companies to have hiring initiatives for veterans, since you've said in the past that veterans tend to outperform and also have great long-term outlooks?
Well, it's kind of a split decision. Just as I think there's systemic racism in a lot of companies, I think that there's an inability to realize the great qualities of people who have served. Because there's really a dearth of people at the top of large companies who have served. And I had the CEO of Campbell's on yesterday, who is someone who served as an Army helicopter pilot. And to me, he's a person who makes incredibly fast, strong decisions. His decision making is incredibly rigorous. And that's what you would think it would be the case for a higher level Army, Navy, Marine, Coast Guard, and I don't see it. I don't understand why these people aren't higher levels, if not CEOs of major American companies. I'm going to have to dig into this because I don't get it. And maybe it would help to see a CEO of a major bank, say, be someone from the military. Whatever. It is uncomfortable to me to see the ratio of people who are trying to be recruited and the people who are CEOs who came out of the military.
And looking at COVID cases, Jim, we have now recorded over 100,000 cases for 7 days straight. Is it time for investors to start preparing for a brutal second wave that we've been warned about?
Well, I think we're in a second wave, and I think it is brutal. And I think that people have to be worried not about lethality, but about the so-called long haul. What happens when you are not sick, not well, so to speak, where you're just tired, or what happens when there's heart damage or brain damage. We don't know much about this. I mean, just the other day, there was a piece by Gina Collada, the excellent reporter in the New York Times, about whether this that so-called tsunami of cytokine problems, that it may not even exist, that wasn't a real problem at all, and it was just the way that the drugs were administered. I mean, the more we know about this thing, the more we realize we don't know, which is what's so incredible about what Pfizer did. I mean, they've created the blueprint and then figured out how to trick the blueprint of the which is the RNA, and as if to get around all of these issues that the DNA has had to deal with when it comes to this cytokine storm, or when it comes to the general acceptance of the fact that this thing goes right to your lungs. It makes it more remarkable every day. Let's just hope that 90% holds up over close scrutiny, because, boy, do we need it.
And speaking of COVID and the Pfizer vaccine, Pfizer CEO Albert Bourla had a pre-planned sale of 60% of his stock. The sale happened the same day that the results came out from the vaccine trial. But I want to emphasize real quick that this was part of Rule 105B5-1, which is a predetermined trading plan allowing company staff members to sell stock in line with insider trading laws. Jim, what's your advice to investors just reading this headline without reading the context?
I mean, I don't know. It's such an ill-advised move to put a plan like that in. I mean, the fact that it is there's a safe harbor on 10b5-1 that allows them to do that. Certainly, sometimes things are legal, but it doesn't matter. He's not going to be prosecuted for what he did, but it's not. It's a very suboptimal thing to be able to have one of those plans in. And I know that. I mean, I've studied this probably more than Pfizer has. And what you need to know is that it is hard to change these plans. You can't put it in place and then change it. All right, that's frowned upon. But why put it in place? I mean, given the fact that you are doing a very high-profile test that is absolutely imperative that it be conducted. And one, what the hell are you doing entering a cell program? I mean, this just makes no sense at all. Maybe it's triggered by price, but it's just not what you do. I mean, it's just an ill-advised thing to do, and the man's ill-advised. And I think the fact that we're already talking about it and everyone in the country is talking about it in the business media shows exactly how ill-advised it is. There will be no repercussions beyond the fact that we will not think as much about Mr. Bourla as we did before, which is the same way I felt about Moderna, which is a company that I champion. And then when I saw the insider sells, even though they were on a pre-plan, I became less enamored simply because that's not what I want my CEOs to do. I don't want them messing around with their stock, putting plans in. Come on. These are big issues. Don't sell stock. When you sell stock, even with the safe harbor, you are making a statement. And that statement should not be made. Those plans should have been invalidated. They should have gone to the board and say, listen, we don't want anyone doing any of these plans. We want this thing to be, whether we lose money or not, we want it to be done in a way that is prudent. And that what they did was certainly not prudent.
You mentioned Moderna's inside the selling going on from execs at Moderna as well. And so I'm wondering, Jim, do you think that any company that is working on a vaccine right now, should they be pushing back any kind of selling within the company after they release a vaccine?
Yeah, I mean, geez, the legitimacy of the vaccine should be up to the science of the vaccine. But when you see this kind of insider selling, it makes you feel like the legitimacy is up to it only goes as far as the CEO selling. And so if the CEO is selling, then maybe the 90% is not right. Maybe they didn't get 90%. I mean, these are the things that happen. Now, what Pfizer will push back and say is, look, we showed you the data. It's 90%. And give us a break. And then you say, well, look, I don't think it's right that you put a sell program in. And they come back and say, well, it doesn't really matter whether you think it's right. But all of this could be obviated by common sense, which is that CEOs make a ton of money. They don't need to screw around with their stock. I mean, it's just a mistake that causes doubt on what the company's doing. So my memo is that this has happened. All right, Moderna's happened and Pfizer's happened. CEOs who have pre-planned sales, who are involved in Operation Warp Speed, should go to their boards and get comfort to be able to pull those plans so that we won't question what the company's up to.
And I just want to say that this is also something that many Americans are seeing, not just investors. Investors may understand this sell program, but many Americans may not. And in a time where we're questioning the efficacy of a vaccine when it actually is released, I think that your comments, Jim, really sound to the larger population and not just the investors that perhaps watch the show.
Programs when I was at Goldman. I was obviously involved when I was at TheStreet with sell programs. You can pull them. The government's not happy if you do it, but you can say, look, the circumstances change. If you keep pulling them more than once, you can kind of have like I'd say there's an understanding that you can pull the program if you feel that there is something that would make it so it's untoward to continue the program. Because even though there's a safe harbor, if you recognize that there's something very big happening at the company, and you feel like that your program is impeding that, then you have a shot at pulling it. You have like one. The government's not going to go after you, is what I'm saying. If you do it several times, the government's going to come after you. If you do it once, the government's not going to come after you. And in these particular cases, had the guy issued a statement, board issued a statement saying, listen, I'm canceling my sell program. I want to focus on the vaccine. I'm not going to do anything with my stock, buy or sell. Then I think the government would have said, okay, that sounds good. So the idea that it's a safe harbor sucks because it lets people, it undermines their own cause. And but you could have pulled, and they always claim, no, well, you weren't allowed to change it. And that's just untrue. Look, I'll tell you how I know. I did it. I pulled. I got total comfort from my lawyers. Company was in talks to be taken over by selling every month. I was making it so that the transaction couldn't occur. So there were a lot of other extenuating circumstances, so I pulled it, and it was fine. No one said it wasn't fine. I didn't do it more than once, but you could pull it.
Now, Jim, I want to switch our focus and I want to go to software stocks because I want to ask you, how can investors use ServiceNow as a read-through to other software stocks?
Well, the market's reading is going and making a read-through. I mean, Salesforce is up. I find, the companies that have historically gone up when we have this, Roku's up. They're not up that much. Okta's up, Adobe's up, and it's early in the day. And I want to warn people that when you have a stock like ServiceNow up 25, that's too much early in the day. It's not. It's 10.50. Now it's only up 22. So it went down 3 on say 100,000 shares. So just be careful. It's early to be able to declare that those stocks are fine.
Jim, over the past year, I'm looking at Occidental Petroleum right now, and over the past year, it's down over 67%. You said that investors are getting another chance to sell Occidental Petroleum today.
The JP report was very well. What was good about how they are going to have a hard time drilling and also meeting their covenants. The market loves the oils right now. All right, we're in one of those love oil phases. And I think that there are people who are saying that Biden's going to restrict them from being able to drill in federal land. So therefore, there'll be some oil scarcity. The only place that really matters, by the way, is New Mexico, where there's not that much oil. So I think that what you have, importantly, is a thesis which says that oil's going to go higher, and that's trumping right now the JP Morgan call. But I'd say go with the JP Morgan call in the end and sell the stock.
What happens if I don't take that opportunity to sell today? Will there be another one in your opinion?
They come around all the time. These analysts can't resist recommending things. There'll be someone who's looking at the fact that Occidental's not down off the JP Morgan sale, and they'll come out tomorrow and say, listen, it's time to buy. They can cut their costs and be able to make it so they make a lot of money at 40. I mean, that's what that's what happens with these situations. And everyone has to accept the fact that there is a kind of a promotional aspect of a company that a company needs a lot of banking business. They have a lot of things to do. More importantly, there are people who just plain believe that oil is going to go to 50, 60. And I am not one of those people, but there are people who certainly believe it.
Jim, one of the biggest earnings reports from yesterday was Lyft, and one of my takeaways from Lyft's call is that they're really banking on a swift return to normal post-vaccine. But if we're being honest, there's still quite a bit of work to be done with the economy and the new norms, and there isn't quite a clear breakdown of vaccine distribution yet. So, Jim, do you think that the company needs to pump the brakes on the optimism for a post-vaccine return to normal?
These companies don't know how to pump the optimism. That's not their job. They think their job is to tell a really good story. I mean, Uber's back to 46. If you wanted to own one over the other, you own Uber because Uber has a very developed a food delivery system. But this stock has made its way all the way back because we're in a vicious bull market. And even though these companies, if you take Lyft, even though year-over-year it's really bad, quarter-to-quarter is much better, and that's what people are hanging their hat on. I don't want to hang my hat on that because I just think that if we're going to have another wave. I don't want to be in that B2C business, but I do think that there are a lot of stocks that work in a second wave.
And in a second wave, more people might be buying new laptops, and Apple just came out with their new MacBook. So yesterday
Meaningless. It's a cell phone company, and it's a service revenue company. And I think it's great to have fantastic MacBooks. I, like many other people, am supported by companies that do not use Mac. That's why a lot of people feel it's a stay-at-home issue. But the needle mover here is the 12, and I think the 12 is going to sell really well.
So I'm taking it. Yesterday, you told us that you wanted to be dazzled by the event. Were you dazzled? It doesn't sound like you were.
I mean, look, I do want a fast PC, but I want dazzled by the fact that Biden's president and the Chinese are encouraging people to buy Apple phones. That would be good.
So let's talk some more about Chinese stocks. We've got Alibaba's Singles Day bringing in $70 billion in sales. How could a company like maybe Amazon find an event or holiday that matches the success of Singles Day?
Well, I mean, I think that we have Christmas. It's pretty good. We have holidays, Hanukkah, Christmas. You got that. They don't have that because they're a anti-religious dictatorship. So, but they created this kind of consumption holiday. We have it naturally. So I think we're okay.
Taking a step back, China as a whole is tightening regulation and is warning against monopolistic behavior. So is this a concern for big Chinese tech stocks? And I think it's worth mentioning that this also comes as U.S. lawmakers worry about monopolistic behavior from U.S. tech companies.
Well, the communists are unlikely to continue to allow billionaire capitalists to be as powerful as they are. Just as Europe is cracking down, and so is our country. But I think the difference is that they rule by fiat. So if they decided that Jack Ma's too rich, they could just take his money away, they'll expropriate it. I was surprised that they were so legalistic about it, but I think they don't want to destroy the markets overnight.
Jim, I'm taking a quick look at the markets, and normally on Action Alerts Plus members only call days, the markets tend to be down, but right now we've got the Dow very barely flat.
Nothing's changed. There'll probably people will be talking about my thesis about a unlikely smooth handoff, and when people talk about that, they will spin theories that probably won't come true. But the fact is that we have to be prepared for it, and it will be an opportunity to buy, not sell.
And there you have it. If you haven't already, head on over to actionalertsplus.com. Jim will be going live over there at 11:30 a.m. Eastern. This is a call that you're going to want to tune into. Thanks for joining today. I'm Katherine Ross. I've been joined by Jim Cramer, and we'll see you tomorrow.